You say in your report that this is akin to an Enron and WorldCom combined. Obviously, a lot has changed since those two scandals. What do you believe is the role of the Public Company Accounting Oversight Board? What's the role of their external auditors? Were all of these people missing the mark here?
Yes, the gatekeepers have consistently failed Wall Street. Look at the global financial crisis. All the banks got a clean bill of health from the big four accounting firms and from the regulators, and it turns out they had hundreds of billions in toxic assets sitting offshore in special purpose vehicles that no one saw, including the rating agencies.
You didn't speak with the company. Why not?
I prefer just to use the financial statements. I didn't want to let them know what's coming. I didn't want to have them engage in a cover-up and destroy documents.
I mean, it begs the question. There's going to be some criticism out there that, you know, given the fact that you are working with an undisclosed hedge fund, given the fact that the stock is 6% lower today, that even if these allegations don't turn out to be true, that, you know, there's still a conflict of interest here. How do you counter that?
I needed to get my team engaged, and I put a team of experts on this. And the public deserves to know. The shareholders deserve to know. I've been a big advocate for investor protection. I've done many cases on behalf of investors, including the foreign currency cases. I did the cases against many Ponzi schemes, including Bernie Madoff and several other billion-dollar-plus hedge funds that have been Ponzi's. I put a lot of people in prison over the years, and I'm just continuing that trend. And I need to get paid. I have a family to support.
In terms of the long-term care business, certainly that's been raising quite a number of eyebrows. It was such a huge skeleton that came out of the closet. Back in March, they had their quote-unquote teach-in. I think a lot of folks on Wall Street were expecting maybe those reserve numbers to be increased. When they didn't, it was seen as something of a turning point for the stock. How did you get to your numbers, and why do you think the current numbers are wrong?
We went to the statutory filings of 8 GE reinsurance counterparties for long-term care, and we pulled the regulatory filings for the years 2013 to 2018. And we saw all the losses falling onto GE's books, and we saw how much premium dollars they were taking in and what their loss ratios were. GE is losing $5.27 for each dollar of premium income they are taking in. Those losses are unsustainable, and they're growing at an exponential rate. For 2018, they grew at 60% rate. It's growing exponentially, and it's going to make this company probably file for bankruptcy.
All right, two things. This is the dynamic is not specific to GE, right? It's an industry dynamic. The way people lived longer. We've been over this already. They've telegraphed this to a large degree. So how is it any different than Unum and AIG? And if the liabilities take place over several decades, why would you take a charge for that now? Why wouldn't you be able to take a charge of that over time?
Usually you reserve in advance so that you can invest the money in the bond market and earn returns on it so that you have the money to pay claims when they come due. And GE hasn't done that, so they're not going to have the money in the future to pay these claims. And that's going to lead to bankruptcy for GE. And if you want to compare it to Unum, Unum's loss ratios for 2018 were 90%, which means they took in $1 of premiums and paid out 90 cents, so they were profitable. For Prudential, 81%. For GE, 527%, many times greater. It's unsustainable, and it's growing.